The stock market just hit a number nobody has ever seen. The S&P 500 closed above 7,100 for the first time in history yesterday. Meanwhile, the Nasdaq is on its longest winning streak since 1992. That is 34 years ago. Let me put this in plain terms. If you have a 401k or retirement account, you probably just watched it hit an all-time high. The market has been climbing for weeks, and it did not stop even with the Iran conflict and oil shock happening in the background. Here is what is driving this. First, oil prices dropped sharply after Iran reopened the Strait of Hormuz. That eased fears about a prolonged energy crisis. Brent crude fell about 10% in a single day. That kind of drop tells you the market thinks the worst of the oil shock might be over. Second, earnings season is underway, and so far the numbers are not terrible. Companies are reporting, and investors are finding reasons to buy. We are seeing money flow back into tech stocks, which is why the Nasdaq has been on such a tear. Third, there is a sense that the Federal Reserve might still cut rates later this year, even with the oil shock. Fed Governor Waller gave a cautious speech yesterday, but he did not say rate cuts are off the table. He just said the timeline might shift. The market heard that and decided to keep buying. Now, let me give you some perspective. The S&P 500 at 7,100 sounds like a big number, and it is. But what matters more is the trend. This rally has been broad. It is not just one or two stocks carrying the index. Multiple sectors are participating. That said, there are some things to watch. The market is pricing in a lot of good news. If earnings start missing expectations, or if the Iran situation flares up again, we could see a pullback. Markets do not go up in a straight line forever. Here is what this means for you. If you are invested in index funds or a target date retirement fund, you are probably sitting on gains. That is good. But do not let a record high make you complacent. This is a good time to check your asset allocation. If your portfolio has drifted because stocks have run up so much, you might be taking more risk than you realize. If you have cash on the sidelines waiting to invest, nobody can tell you whether now is the perfect time or if there will be a better entry point later. What I can tell you is that trying to time the market rarely works. If your time horizon is years, not weeks, getting in gradually usually beats waiting for the perfect dip. One more thing. The Nasdaq winning streak is impressive, but streaks like this tend to end eventually. That does not mean a crash is coming. It just means the pace of gains might slow down. Do not be surprised if we see some choppy trading in the next few weeks as earnings roll in and the Fed figures out its next move. The bottom line is this: the market hit a record high. Your 401k is probably up. Enjoy that, but stay grounded. Markets can turn, and the same headlines that pushed stocks up today can pull them down tomorrow. Hit subscribe if you want the plain English version when the next number drops.